Kia ora koutou, I'm Satish Ranchod. Welcome back to Westpac and our weekly look at the New Zealand economy. Now, over the past couple of weeks, we've had some big changes in New Zealand's economic landscape. First up, we had a dovish tilt from the Reserve Bank. They're now signalling that official cash rate reductions could be coming sooner than previously anticipated. Hot on the heels of that news, we had the softer than expected June quarter inflation report. Now, on the back of that news, we've seen some mortgage rates starting to come down. That'll be a welcome relief to a lot of New Zealand households. One of the big questions, though, is how quickly will households see that relief in their back pockets? Only around 10% of New Zealand mortgages are on floating rates. The other 90% are fixed for a period. And that can mean that it takes quite a long time for some interest rate reductions to pass through to households. But I think this time it could be a little bit different. What we've seen over the past year is increasing numbers of borrowers shifting onto shorter terms, and that means the pass-through of these interest rate cuts that we're now seeing could be a bit faster than expected. Over the next 6 months, we'll see about 40% of fixed-rate mortgages coming up for repricing, and another 30% will come up by repricing for the 6 months after that. And that means we could see that relief hitting households' pockets a bit sooner than we had in the past. Now, it'll still depend on when households fix their mortgages as in terms of how much relief they see, but this will still be welcome news for households who've been worried about rolling on to very high interest rates. Now, looking to the week ahead, there's some important news on the horizon. We're going to have updates on the labour market and business confidence. I think those will both be important developments for the Reserve Bank to watch. That's it for me this week. We'll talk to you next time. Ka kite anō.